Good afternoon, Forex traders all over the world. My name is Leo Kay, as usual, the guy who's always preaching about Forex trading. And today, I'm coming with a topic that is very crucial in our Forex trading journey. Yes, that's right. Before we get into the topic of today, if you haven't subscribed to this channel, please press the button below, the subscribe button below, and put a thumbs up so that you can be notified every time we come with valuable information like this. How to get high probability setups. That's the topic of the day. How to get high probability setups every day. See, Forex trading is a game of probabilities. So you need to catch those high probability setups in order for you to make money. Otherwise, you're just going to be donating into the markets each and every day. So for you not to lose money, you need to have a way of catching high probability setups. If you want to become a consistent, profitable Forex trader, you need to learn how to find those high probability setups. Yes, that's right. Here's a simple way of doing it. There is a simple way of doing it. Firstly, you must find the trend. Identify the trend. Is it going up? Or is it going down? Is the market going up? Or is the market going down? It is very, very important. That's the first thing that you need to identify when you look into your charts. The first thing is for you to see or identify whether you are in a bullish market or you are in a bearish market. Secondly, you must wait. I'm talking, as I'm speaking, I am speaking the way I personally trade. This is how I trade. This is how I find my high probability setups. So I'm trying to teach someone today to also catch those high probability setups. So you identify where the market is going. You identify the trend. Maybe you don't know. When we say bullish trend, it means it's going up. So if it's a bullish, you need to identify whether it's a bullish or it's a bearish. A bearish is when it's going down. Okay. Then the second thing for you to do is to wait for a pullback. You wait for a pullback. Don't chase the market. Don't follow it. Don't chase it. You wait for it to retrace. Wait for it to retrace. Then when it retraces, you now look for a confluence. You look for the confluence. The word confluence it means it's a confirmation. It's a confirmation in one area. You are looking for multiple confirmations in one area. That's the confluence. You are looking for multiple confirmations in one area in order for you to find the entry. Going where the market is been going, not against it. You do not swim against the river. You go with it. If you swim against it, tell you will find yourself somewhere where you don't want to be. For example, me, I use the exponential moving averages. I use the 10 exponential moving average and I use the 23 to find the trend. To get the trend, to know where the market is going, I use the 10 exponential moving average and the 23 exponential moving average. Then I also use the Fibonacci levels. I also use the Fibonacci levels to find my confluence. Okay? So when everything aligns, I find the trend of the day. I find the trend of the day on my charts using the 10 and the 23 EMAs. That's the exponential moving